had the privilege of meeting some of the billionaires in this country, Mukesh Ambani, Gautam Adani. What did you learn from them? Let's start with Mukesh Ambani.
So we were invited for the reception. Now what happened next I could have never thought of. When he saw me, he got out of his line and he told my family. So majority of our portfolio is real estate right now.
80% is in real estate.
Yes. So it has probably given more than 2 crore of rental revenue, just that one small act that we did.
If I were to ask you today, if I have, let's say, some liquid capital lying around, let's say 30 lakh, 50 lakh, 1 crore, what are those new hotspots in India where real estate is really booming, which I should consider investing in?
But if you're looking at a 1 crore property, then you first have liquidity worth 1 crore and then get into.
Mr. Manan Kotak.
Yes.
Who are you?
So I'm a third generation accidental entrepreneur. Our business was started by my grandfather in 1950.
And what is this business?
So we are into a publishing business. It's a magazine called Chitralekha. And it's very widely known amongst the Gujarati audience. It's in Gujarati language.
So as a 25-year-old person living in India,
Yeah.
if I'm starting out my career,
Yeah.
how would you chart out the next 5 years to become financially independent?
Yeah. Initially, one would need a certain amount of liquid wealth that one builds. And then once you have a reasonable liquid wealth, because then you can consider going into real estate.
Can you define in terms of numericals, what is that reasonable amount of liquid wealth?
So it'll depend from which city you're living in.
Let's assume metro cities.
So what I normally suggest is a very conservative way that if you're looking at a 1 crore property, then you first have liquidity worth 1 crore and then get into property. But let's say somebody is living in Bangalore where the cost is 10,000 rupees a square foot. There it can be slightly more skewed. So you may think that instead of creating the entire, even if you're looking at a 50 lakh property, if you have earned, let's say 25 lakhs already liquid portfolio you've created, so 50% amount of the property, plus you're working well, you're looking at increments over time, then you can jump in a little earlier for real estate. That is what I would suggest overall.
If I were to ask you today, if I have, let's say, some liquid capital lying around, let's say 30 lakh, 50 lakh, 1 crore, what are those new hotspots in India where real estate is really booming, which I should consider investing in?
One is what we have seen is, let's say, places, if you're living in Mumbai, then places in the outskirts of Mumbai. Let's say Panvel. Panvel is there, Kharghar is there, Thane is there. These places are growing. So if you have a budget which is 1 crore or around that point, these are the areas maybe one can look into. So one has to look at infrastructure, how it's developing, and then the budget that you're looking at. Thane is something which has already grown a lot, but there can still be a lot of appreciation because I was reading recently that the bullet train, which is starting from BKC, the first stop may be Thane. It is expected to be Thane, and it is said that from BKC to Thane, one will reach in 10 minutes in the bullet train.
Wow.
Okay. Yes. So keeping all these things in mind, one can decide which are the future areas where one can look into and invest. There is one more place where we invested was in Gift City. Gift City is Gujarat International Finance and Tech City. We invested there in 2015 when there was nothing there. There was just probably 1 building or max 2 buildings. And there was an offer from a builder. It was for World Trade Center. And there was an offer where the amount that you invest, you get a 10% return on that amount every year.
Okay.
Until possession. So we said this is a no-brainer because one, the budget is less. It was close to 50 lakhs if I remember right. Plus on the amount that you've invested, you're getting a 10% return every year. And then whatever appreciation happens because of the development of Gift City. What has happened is from 2015 till now, there was a certain point to which the developer gave the 10%. So we have recovered almost 30 to 40% of the property price through that interest amount.
Okay.
And the appreciation also has been great. Gift City has picked up in the last 1 or 2 years to quite an extent. Companies like Google, IBM, all of them have set up shop over there. There's Jamnabai Nursery School that is there. In fact, there's also a news that they might be developing an F1 track these are again places where one can look at a budget which is not as high and places which are developing.
So Manan, now I asked this question to all the guests. I know this is the most important question, right? Now let you just tell me, what is the asset allocation looking like?
So majority of our portfolio is real estate right now.
So would you
Almost
say like
80% one can say.
80% is in real estate?
Yes, but now the rental returns we are getting from there, we are slowly increasing our liquid investments. Then we have a certain investment in gold as well. RBI sovereign gold bonds are a very good scheme one can look into. So we have invested in that. There are very few, let's say, physical gold that we have kept with us, again for very unexpected situations. That is how we manage, and we are lucky to have, probably we would have 1 or 2 bitcoins as well.
Okay. Can you, like, we've spoken so much about real estate, but I've always, stuck to the side of the stock market because I like liquidity. I like to just sell it whenever I want. I just feel like if I can sell it whenever I want, I just feel rich for some reason. But if it is real estate, its money is stuck, so I don't really feel rich. So what would you tell me to change my mind as to why you prefer real estate so much over the stock market?
So here the thing is, one is I don't believe we should stick to only one asset class. Every asset class has its plus and minuses. Now the advantage that is there with real estate, one is you don't have to pay the full amount upfront. There is a certain price cost for that apartment or the office which you're locking in today's date, and you have 20-25 years to pay for it. Second, if it's under construction, you get 3 to 4 years to pay under construction in smaller amounts at maybe every 3 months or 4 months. I'll share one example of a friend who lives in Bangalore. Both husband wife working. They purchased a house, 2 BHK, under construction. So they normally get 3 to 4 years. Their project delayed. So they got 5 or 6 years to pay.
Okay.
So they could manage to pay quite a lot under construction itself. Post that, when they had to pay the final amount, they took loan, bought the place. After that, they shifted in there. The place had reasonable appreciation. They earned more. And they said, we now need a 3 BHK. We need to expand into a 3 BHK. So at that time, we met that friend. I told them, listen, please, if possible, try and hold on this asset. They wanted to buy in the same building. So I said, please try to hold on to that house and invest in another 2 BHK or 3 BHK. And they said, no, we've already spoken, deal ho gaya hai, abhi mood hai, no, we need this amount. I said, even if you can stretch it a bit, keep it. They sold it, bought the 3 BHK. 2 years later, she came back home and she said, recently my husband bought a BMW. And that time I realized that what you said, a wise man had said before, not to sell the 2 BHK. And now if my husband could spend on a BMW, I'm sure we could have managed to retain that. And when we sold it, she said it was probably about 80-90 lakhs. And she said today the value is 1 crore 35.
Wow.
Now imagine, one, they would have got that rental income, had 2 places, 2 assets with them. And this asset which they sold worth much more higher now. It was at 1.35 crores now.
Yeah.
So imagine the advantage. Rental income bhi mila, ye bhi appreciation mila. So I don't know if you know, but in this same building where your office is, we have invested in an office.
You have an office in this building?
Yes. And the reason we invested in this place is it has a stadium view. Now think about being in Mumbai, which is filled with buildings all over. If you look at Juhu or any other place, you'll see right next to each other building. And suddenly you find an office space which has a huge stadium view with buildings far away. So that is why we decided on this property. Now what happens is, when you have a property which is unique, which is rare, you can negotiate your terms in a different way. So there are certain prices you may be able to get higher than a market rate because you have this sort of a view. So in real estate, there are a lot of things. Who needs the place? Who wants to rent it? Do they have their house or office close by? All these factors help in, let's say, negotiating a good rent, a good deal. And these are things which we cannot do in stock market. Stock market, there's a price in public and that's it. You cannot negotiate, I want this company Right now it's at 3,000 rupees per stock, and I want to purchase it for 2,000 rupees. Will you give that stock to me? That does not happen. But that happens in real estate.
And like, what is the rental yield that you get?
If you look at smaller offices in Mumbai, you get about 5% return annually on the rental income. In a flat, you may get between 2.5% and 3.5%. If you go in for a larger office space, which is at least, let's say, 2,500 to 3,000 square foot, it is a sizable amount of investment. But if one can reach there, then one can get a 7-8% return.
Wow.
I'll give you one more example. This is again thanks to my father. He, in 1980, around 1980, he purchased a home. So it's a sea-facing view. Now, that was in 1980. So it's been more than 44 years. The building is over 40 years old. So we've not been able to move out of that place because still that value is there of a sea-facing view. If you look at new projects within the area, inside, let's say they are selling at 50,000 rupees a square foot. Our building, being a 40-year-old building, still commands a rate of, let's say, 60,000. So it commands a little higher rate than the newer buildings as well.
Because of the view.
Yes. So even if it's your smallest or even the first investment you're looking into, which may be at 30 lakhs or 50 lakh, spend that time to scout a good location, a view which, let's say, even if it does not, you don't give it on rent, you would love to go there and use the space. And that will give you a return in a very different way.
But now, coming to you, Manan, I remember you mentioning that right now, you are focused on, one is your primary business, which is the printing, publishing business, which is making you money. And then you have a lot of investments on the other side.
Yes.
Right. So can you walk me through that journey? When you started entering your business, what was happening? What was your family doing with the money that was being generated?
Yeah.
And what different that you did to help you reach a point where your investment income has overtaken your business income?
Yeah. So yes, like you said, Rich Dad Poor Dad is something I read when I was in college. And since then that gave me the investor mindset. So he discussed in very simple terms what are assets, what are liabilities, what is passive income, what should be your focus. That focus on assets, don't spend on liabilities.
Yeah.
Your car is a liability, your house is a liability. My father had bought that office 40 years back.
Okay.
So we still have it. We have used it for 40 years. When I got into business, I read Rich Dad Poor Dad. So investor mindset tha. And I was constantly looking at where can we create our first passive income from. When I entered office, I realized that certain space in the office was not used well. So 2007, we cleared everything, got it separated, and we gave it on rent. Now imagine 2007 till now, from 2008, let's say, till today, it is on rent. So it has probably given more than 2 crore of rental revenue, just that one small act that we did. Now, the asset which my father had purchased, that particular portion, he had purchased it for 10 lakhs.
Okay.
40 years back. Now imagine today we are earning almost double the amount every year. So you see, over time, we tend to think of next 5 years, 4 years, 7, 8 years, but we don't think of 20, 30 years. So even if, like some people say that rental returns are very low in, yes, commercial or in residential, it's very low. Commercial, one can get, let's say, about 5% rental return. So they stop at that, but there's a lot to it. You get a certain deposit for 4 to 6 months, you get deposit. You get a certain amount of rent every month. Now imagine every month, if you systematically put the rental amount into liquid funds, imagine where that amount can go to. So it does not stop to only a 5% return. You take the deposit, invest that in a safe place because you may have to return it at any point. And every year there's a 5% increase in rentals.
Wow.
Yes. So
I'm
now
just looking at the numbers,
Yes. So now if you calculate it in this way, and somewhere this is paying back for your property. So let's say with this you get 7-8% return you manage. Imagine in 10 years you've recovered almost 80% of the cost of your property. And after 10 to 15 years, once you've recovered, then all the amount that you're earning through rent is additional, plus the worth of the property is additional for you because you've paid off for it.
Now, Manan, enough about us, right? I also know that you've had the privilege of meeting some of the billionaires in this country, some of the most respected people in this country. Mukesh Ambani, right? Gautam Adani, Uday Kotak. So I wanted to understand, firstly, can I meet them? And secondly, what did you learn from them? Let's start with Mukesh Ambani.
So Mukesh bhai, we had invited him for an event of our company in 2007. And let's say the event was at 9 p.m. That day he had an IPL match. So we are all ready for the event. At 8 p.m. we see the television and he's there out in the stadium with a jersey cheering for his team. So we are like, aaj gaya, late hone wala hai, what will happen? Till about 8:10 we saw him at the stadium. 9 o'clock was the event. 8:50 he arrived. Totally changed, suited, booted. Anyway, the event happened. Post that we had dinner together. That's when we got the opportunity to ask more questions. So I asked him, we asked him that book, I mean, do you enjoy reading books? He said yes. He said, I read almost 300 to 500 pages a day.
Wow.
Yeah, and we were stunned. And we said, what kind of books do you read? I remember he mentioned about a book called Execution, Discipline of Getting Things Done. So he said that was his favorite book at that point. Then I asked him about university, that post-studies, was it helpful for him or no?
Well, he went to Stanford, if I'm
He went to Stanford, yeah. And he dropped out in between. So I said, for how much ever time you were there, was it helpful? So he said that, look, what was helpful was the people he met and the professors he met who taught all of them. Surprisingly, he said, I'm still in touch with all the professors who taught us and I still discuss and brainstorm things with them.
Wow.
So post this, we met him for the second time in around 2014 or 15. My father and I had emailed him saying that we just need your guidance. If 10-15 minutes we can meet. And what I can share from there is his thinking at two things. One was scale. He thought a lot bigger. And by then his mind was already fully digital. So he said, whatever futuristic you do, invest in digital, focus on that and grow that. Post that, we met him for the third time during his daughter's wedding. So we were invited for the reception. And while we were going up on stage, I got separated from my family. So there were two people who came in between. So my family was in front, two people, and then I was there. While I was wishing the pyramids, my family had already reached Mukesh Bhai Neetaben. I saw from the side and I realized my mom was telling Mukesh Bhai that our son Manan has also come. Now what happened next I could have never thought of. What happened is when he saw me, he got out of his line where they were standing and he came towards me. Seeing that I jumped out of line, I met him. He put his hand around my shoulders and he told my family, "Amaro favorite chokro che." Now, I would have imagined, let's say I've sent one email a year. The number of people he's meeting, the kind of people he's meeting, it probably wouldn't be there anywhere on top of his mind. But him coming there and doing this again made it special for me. And then I introduced my wife to him. And before leaving, he said, "You're part of family. Ensure everybody eats properly, all their guests eats properly." So that's the kind of connect they keep. And doing it at that level, I'm sure it takes a certain kind of effort to make that happen.
Of course. Why do you think they still work so hard? Like what do you think they tell themselves when they get up in the morning?
So what I believe is at that level, money is not the main motivation. There would be a lot of other things that take a lot more priority. So let's say, what purpose do you have? So I had asked Gautam Bhai that now you have so many businesses. How do you decide what next business to get into? So what he replied was that, money you can make from any business. You can do some trading, do something else, make profit, you made money. But what we focus on is, does this business serve any higher purpose? Does it help the people around? Does it solve a problem for the country? And that is what we think. And if the answer to that is yes, then we get into the business. So that is the answer he had. We discussed. And that's what I feel, that their main motivation is not financial.
I think I agree to that point. I think after a certain point, it becomes about social impact.
Yes.
And what bigger social impact is there than working for the nation, working for the country,
yes.
Right? And if you look at what Ambani and Adani has done, Ambani, with the entire Jio thing, we look at it as an entire stunt, all of a sudden bringing down the price of broadband or the internet to 1 rupee per GB, just to disrupt the market and make a show out of it.
Yeah.
But what it actually did is that it skyrocketed internet penetration. It skyrocketed the number of people who can access smartphones and be digital.
Yes.
And when a billion people are all of a sudden digital, more businesses can grow. Because if you can access more people because they have internet and because they have smartphone,
Yes.
your businesses will flourish faster. I still remember when I was in college, before the Jio thing happened, we used to switch off our data, right? When going to college, you like whenever you get a break, you open the data, see if you have messages. never ever open YouTube on mobile data pack. Never open Instagram on mobile data pack.
Yeah.
And when you go to class, you switch it off.
Yes.
Because if you don't switch it off, then that entire GB will be gone. And that it was 255 rupees per GB. I still remember. Now, all of a sudden, when it became 1 rupee per GB, you never switched it off. You're always connected to the internet. You're always checking your phone faster, right? So it becomes, so there is more time spent on the phone. The more time you spend on the phone, the more time businesses can sell stuff to you.
Yeah.
And that is why the entire, the boom has happened in the country recently.
True.
So I think that the singular point of disruption for India happened when, that Jio happened. Because there was so much of people entering the digital world that so many more businesses could come. And then after, of course, the VC money came in and startups happened. But how? Because there are customers ready.
Yeah.
And because you could reach out to those customers.
True.
Instead of, running big, billboards and, TV ads, you can now reach out to them digitally.
Yes.
Right?
And yes, just one last thing I'd like to share is that thankfully I've been able to meet people who have achieved a lot. And there are so many times when I go through really difficult decisions, whether to invest here, there, this is the issue with our company, what do we do? It is these mentors that come and help you during those moments. And that I cannot emphasize enough. So that is what I would urge a lot to all your viewers to
Finding
look
a good
into.
mentor.
Yes. Yeah.
Fantastic, Manan. Thank you so much. I loved this conversation.
Same here.
I think we could have gone on for a lot more hours.
Yeah.
And it's an absolute pleasure talking to you. It just shows that what happens when there are 3 generations of entrepreneurs. All that knowledge has come to you. 75 years of knowledge has come to you and has come out. Just a fraction of it has come out today. So thank you so much.
Yeah.
And guys, I'll see you in the next one.